Yeah, it's Wednesday again, and I'm super happy to be here again with you guys to continue the series in which we started last week. Last week we spoke about technical analysis and fundamental analysis, introduction to them, and I believe I've been able to do justice to tell you guys the reason why fundamentals, technical, they are not enemies. They move hand in hand. In fact, it's actually fundamental that is the mother to technical because pair moves according to each currency move according to the strength or the weakness of the economy of that country. So which simply means whatever you're seeing on technical, fundamental is the one behind it. Though we are able to predict with much accuracy where currency pairs are going, where melters are going, where indices are going with our technical analysis, but the truth of the matter is it's fundamental that backs this thing up. Okay, so when you see any aggressive move in the market, it's not just your technical analysis. Just know that there's something about fundamental that is backing up what you just analyzed out. So today we are moving to the second episode, the second topic I have for this series, which is understanding market trend. Understanding market trend. There's a saying that says that your trend is your friend. I've seen a lot of traders clock out beautiful analysis and they want to take position. And what they did was, there's a kind of feeling that happens when you want to plot out analysis and you are plotting out, you are doing the analysis according to the trend. There's this much confidence, there's this much feeling of price going towards your way. But we get more scared when we plot our analysis and our analysis against the trend. I don't know if you guys have experienced that before. For me personally, whenever I plot any analysis that is in line with the trend, trust me, I take that trade with my full chest. Even if it's a loss or a profit, I know that I'm following the trend. Yeah, and eventually, the pair might come take out my stop loss because of manipulation, but overall, the pair will still go my direction. So, but there are other people when the analysis are always against the trend, and these guys keep losing money each time they trade. So I'm here to refresh your memory. I believe people seeing this video or people that will be seeing this video, I believe you at sometimes you're trading and you must have heard about trend. You must have heard about trends, yes. But today, in today's class, in today's episode, I want to show you more in depth of market trend. More because we need to know how market moves. In fact, how do I identify a trend? How do I identify a trend? How do I know that this pair is going to tank? How do I know that this pair is going to buy? How do I know that this market is selling? How do I know that this market is buying? So that is what we are here to sort out today. So you guys should let's jump into the chat straight away. I'll be doing some textbook explanation, and I really want you guys to follow because we've read a lot of books concerning trend, we've read a lot of books concerning counter trends, and yet we find this very difficult to figure out on the chart. Simply because the way the textbook represents it for us is not the way chart is going to represent it. They are two different things entirely. Textbook explanation and real life experience. They are different things. For example, let's go to the chart. For example, let me remove this. Let me remove this guy here so we can have a clean chart. For example, you guys should see this. For the sake of beginners that will be watching this video, this is called an uptrend. This is called an uptrend. So what does this uptrend means? Uptrend simply means, price keep making higher highs and higher lows, right? So this kind of market movement is called what? It's called a downtrend, sorry. Let me adjust this now. It's called a downtrend, and this kind of movement is called a ranging market, a shelving market, a sideways market. Yeah, so this is it. So this is the basics of market trend. We have just three type of trend: uptrend, downtrend, and sideways trend. As a trend trader I am, I don't reckon with this sideways trend. Though if I see it on higher time frame, I can look to pick entry to ride along to the upside. But I deal with trend. Basically, I deal with trend. So now let's delete this guy here. This is not what we are here to talk about. Let's delete this guy here. So now this trend and this trend, this is what we are doing. This uptrend and this downtrend. Before I move further, I really want you guys to, if you have a jotter, your trading journal, just write it somewhere. The first law of trend line states that a market will continue to be on an uptrend so far it keep breaking its high and not its low. And a market will continue to be in a downtrend so far it keep breaking its low and not its high. So let's mark out something. So now this here is the market low. What you have here is the market high. What you have here is the market low. What you have here is the market high. What you have here is the market low. What you have here is the market high. What you have here is the market low. What you have here is the market high. So let me change this eye. Let me change the color of this eye to let me change to green so that we can differentiate that to green. This one here to green. Let's do green. Here's a green. Beautiful. So this is high. This is low. This is high, low, high, low, high, low, high. Right? So now that you understand this, where is the high? The first law states that a market will continue to be in an uptrend so far it keep breaking its high and not its low. So where is the high? This point here. You have this point here as the high. This point here. This is an high. This point here. This is an high. This point here. This is an high. And this point here. This is an high. Right? So look at the lows. The lows were not broken, but see what happened. The highs were broken. Price pushed down from this point, broke the high, pushed down from this point, broke the high, pushed down from this point, broke the high, right? So now let's go to this downtrend. Let me delete this arrow so that we won't get confused. We won't get confused. So now look at this downtrend. Look at this downtrend. We have this point here. This is the high, right? These are the highs. This point here, we have the high here, and we have the high here, right? So now, we have this low here. Let me change this color now. Let me draw one here. Let me change this color. Let's go. Okay. Let's use the gold. Let's see. Now, this is the low. This is the low. And this is the low. So guys, can you see what happened here? So look at this. The high, the greens. So we have this point here. This is the high here. Because see what happened. Let me explain. Because some people don't understand this concept. Why is this high and this is high? Yeah. So this is high here. The markets move from this high to give this low, lower than this high, this low. Yeah. The market pushed up a bit to give a lower high, lower than the previous high, right? Which is the here. The market pushed down to give a lower low, broke this low, give a lower low, to give a lower high, lower than this high, right? The market pushed from this high to give a lower low, lower than even the previous low, to give a lower high, lower than the previous high, right? The market keep pushing down this way. So now, let's mark out the lows. Can you see? This low got broken. this low got broken, this low got broken, and this low got broken. Can you guys see the way it gets broken? Push up, break, push up, break, push up, break, push up, break, right? So now, this is textbook representation of what of what trend is. Let me now show you how it is on chart. Still using this example. Let me now show you how is it on chart. So for example, we have this push up. Aha. So now, I believe some of us can relate to this. Let me adjust a bit. Let me adjust a bit. Yeah, some of us can relate to this. So I don't I don't know if you guys remember when we were in school, in class we'll be taught 2 plus 2 in they'll give us 2 multiplied by 2 in the as assignment, and when we come to class, for examination or tests, what we see will be different from what we were taught. So what most of us have been exposed to is this concept of trend. So when price approach itself with this kind of pattern, this is still an uptrend, but a lot of people don't know how to use this template. I call this blueprint on this kind of market formation. So this is what we were taught. This is what was given to us. This look more harder than this one here, but this is just a template to follow to understand this kind of rough schematics on chart. Okay, so now let's mark out the eyes here. So what you guys want to do first? Is you want to squeeze your chart. Listen, guys, you want to squeeze your chart and you want to mark out the highest points on the chart. Whenever you are treating an uptrend now, this is for an uptrend. You want to squeeze your chart and you want to mark out the highest point of that trend. The highest point of that trend. So let's mark it up now. The first point is here. Let me change this to green so that we'll have so the first point is here, right? The second point I can see is here. The third one I can see is here. The fourth one I can see is here. No, is here. Yeah, this can be it for the sake of those that are just learning. Let's put it that way, then we'll explain later. So now we want to mark the lows. What low can you see? You can see this point here, 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 right? So let's mark out the lows. Let's mark out the lows. This is a low. This is a low. This is a low. This is a low. And this is a low. So now we are having this high, this low. So the question that can be in your mind is, okay, Raymond, ray swings. What's happening here? What is this? What are these? What's this? What are these? How do I understand this? How do I know the price is going to push up from here? Stuff like that. That's the reason why you must stick to the end of this series. You must stick to the end, because trust me, it's more than just chart. It's you understanding price movement, the uniqueness of currency pairs. You understand? So now, this is an uptrend, right? So now, this point here is the high. This point here is the high. This point here is the low. I mean, this point here is the high, right? This point here is the high. This is not the low. This is the high. So this point here is the high, right? That's the way price keep breaking its high. And this point here is the high, but broke down. And the reason why this breaks down is the reason why this will not be the high again. Okay, let me not make it complicated. Okay, so let me steal part of what I have for structure. There's something called market structure. If you understand market structure, even if you don't have any strategy, you'll be able to predict with accuracy that price from this point here, price is going to buy. And this is one of the things as a swing. I don't know of a day trader. As a swing trader, you must know this very well. How to identify market structure. Like when you see a structure, you can identify that this is the high, this is the low market. Fibonacci retracement, then from this point here, my dash is to go long, that kind of thing. So now this point here, we count this point here as a high, but a high for this microstructure. This microstructure, please don't get yourself I just say, don't beat yourself up if you don't understand this concept. Okay, don't worry. That is why you are here. That is why you are here. I will be taking you guys through steps, like step by step, on how this works. I'm talking about structure, a lot of things. So this is for trend, and that's why I'm trading trends this way. So now, this structure here, this high here, gave birth to this low. The high here gave birth to this low. The high here gave birth to this equal low. This one that became equal low. Then price pushed up from there. Then see, the moment price fail to create a low that is that must be how should I say it now? Okay, let me keep that for Fibonacci. Yeah, there's an explanation there. So the market must come back and clear out this low it has created. To come touch, for those that trade SMC, they will know what I'm talking about. There will be a kind of order block here that they will be looking for all to target. So far price didn't come back to do at least 50% Fibonacci retracement. I'm going to have explanation on that, guys, so don't worry yourself. So price must come down, to clear out the liquidity line below this point here. Hit the other block and start pushing up. Though I'm not an SMC trader, but this is a fundamental knowledge that you should all have, and I'm going to treat it right in this channel. So you should subscribe, okay? Subscribe and turn up the notification button bell, and we move. So that is that concern that. So we're not here to talk about this today, but so that's the reason why I say price this way. So notice what happened according to the law I gave you guys. The first law says price will keep breaking it on an uptrend. You want to see price keep breaking the high now, and not the low. So now see, high broken. This high here should be broken. So this is the reason why you can see I can catch a trade from this point here, and price push up, then come down a bit, and I'm not scared. I'm not checking out. So see, price push up again. Don't leave the trade. So it's trend. Once you follow your trend, trust me, dollar is going to be your friend. Yeah. So let's go to that. Let me give you templates of this. We are still going to do this on a live chart, live chart now, on chart. So I'll show you guys everything I mean and everything. We'll mark out charts together, and you see what I'm saying. So now let's move. So for downtrend, don't forget, this is the template given to us by textbook. But let me show you how you are going to see it on a live chart. You're going to see something like this. Hello. The market start doing stuff like this. Yeah, guys, let me see if I can just draw one more. Let's see. So guys, this is what I want you to remember, guys. Let me just add this a bit. This way. So now, this is what I want you to remember. Always remember your template. Once you see any trend, always remember your template. If you can remember your template, you can mark out any trend and be accurate with your markings. For example, now this is a high, right? This is a high. This is the highest point here. Let me just use this for the sake of time. This is a high, the highest point here. This is a low, right? The market's pushed up from here, give a higher high, higher than all these micro highs that you have here. Give a higher high, this serves as the high, then market did what? Push down a bit, gave a low. That led to what? Another high, the highest high. Let's see the highest high here. Right? So market did what again? Market pulled down, gave this point, microstructure, then then market did this. Market did this. So now see, it's different from what we were taught. This schematic you have here is different from what we were taught here. It won't be as smooth as this. What some people, when they open charts, so what they are looking for is something that is exactly in the textbook or exactly on the video they watched. So no. Whenever chart is representing this trend for you, it will be different. It will be different. So with me saying this, let's go to the live chart and let's do some markings. Let's see how it's going to be like. Okay. So the first pair, let's do the downtrend first, and I will show you how I mark this. And I want you guys, what you guys want to do now is, whenever you open a pair, because this is not just a teaching, this is for you to make money. And before I move further, I would love to tell you guys this. Listen very well. It's very compulsory for you to take mentorship. It might not be from me, but from anyone. It's very compulsory. The reason why it's compulsory for you to take mentorship is not because it's not because of someone needs your money. Hello? No. It's because of you yourself. What I'm teaching you, as voluminous, as important, as enlightening, as essential as it is to your strategy. That whole strategy is just 10% of trading. You have the psychological aspect of trading, you have the trade management of trading, you have the risk management of trading, you have the psychological part of trading. So which simply means 10% is not enough for you to start being profitable in the market. Yeah, this 10%, you can find it on YouTube. You can find whatever strategy you are looking for on YouTube. But psychology talks in depth, because psychology doesn't just come from explanation. Psychology comes from experience. Yeah, that's the word. Psychology comes from experience. Unless you have a close proximity, close relationship with a person that is experiencing the kind of feeling that you are passing through now. Because in any way, whatever you are passing through now as a trader, someone has passed through it before. You're losing now, trust me. You don't want to hear about my losing story. You failing now, trust me. You are blowing accounts now. Oh, you don't want to hear about mine. So it's let me just say, it's a matter of mentorship. So that's what a mentor is for. A mentor is to guide you, a mentor is to teach you, a mentor is to build you into a profitable forex career. I believe you guys understand that. With me saying that, so let's rush back into this pair. So let's go to card CHF. Let's do card CHF. Card CHF. And okay, that's CHF. So let's see. Okay, let me just press stone so I can have this. Okay, now this is on H4 joint. Then let's go to H1 so that we can have that trend we are looking for. We can have that trend we are looking for. Guys, remember what I taught you. Woo! Guys, remember what I taught you. Yeah. Remember what you are seeing now. So let me go to H4, let me do H4, so we can have a better understanding of what I'm talking about. So yeah, let's do this one. Don't let us start that complex. Don't worry, this thing that looks like mathematics to you, before the end of this series, I promise you, you'll come to my Instagram and tell me the story of how the story of your trading changed. Just listening to YouTube video lectured by Ray Swings. So yeah, so look at this chart. Whenever, secret code guys, whenever you see a trend, listen very well. Whenever you see a trend, the first thing you want to do whenever you see a trend is you want to squeeze out. Is it squeeze out now? What's squeeze out? Squeeze out is this. Squeezing is okay. Squeezing is this. Yeah, squeeze out. You want to squeeze out? Yeah. You want to zoom out your chart or zoom in? Is it zoom in now? Wait, let me get that in English. Zoom in, zoom out. So whatever. So what you want to do is you want to zoom out your trend so that you can see where it's coming from, the beginning of the trend, and where the trend currently is. So you want to zoom what? You want to zoom out. You want to zoom out, right? So now let's see. So and after zooming out, there's a tool I will recommend for you for those that are beginners in identifying trend. The first tool you need to use is this tool here. So on your trading view, come to this place. We are there 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. This 6 here, just click on this point here, and you will see brush, highlighter. This point here, this is what we are using. Part. You see this part here. Just click on this part here, then pick it. The highest point to the lowest point. Keep marking it this way. Keep marking it this way. Keep marking it this way, guys. Keep marking it this way. As you can see. Okay, I can use this one. I can use this one. So this point here, then to this point here, then to this point here, then to this point here. Then we have price currently at this point here. So now, but this is like a shopping market. From this point here, let me just from this point here, yeah. This look like a shopping market. This look like a shopping market. But let's deal with this trend that we have here. The one we have here. Look, let's start from here. Because this used to be a trend too. Let's start from here. Guys. So now, look at this trend. This is a very beautiful downtrend. The first thing you need to do for me is just pick your tool. Pick your tool. This is my trend. Just mark it out. High. This point here, low. High. This point here is your low. This point here is your high. Oh shit, what am I doing now? This point here is your high. This point here is your low. This point here is your high. This point here is your low. Then we have a point here. So, okay, this is the highest point here. Not this one. This is the highest point here. This point here is your high. This point here is your low. This point here is your high. And this point here is your low. This point here is your low. Beautiful. This point here is your low. Now, let's now remove this part and let's see what we beautifully marked. Can you guys see this? You've marked out the highs and the low just using parts. This is a secret, guys. For those that don't understand how to mark it out here with their naked eye, they can use that tool to mark it out. And trust me, it's very, very effective. So now, you've marked out the high. Now, you've learned to mark out the high and the low, right? So now, let's learn to mark the high before I go to the last part, the last session of this class, So now, let's go to the last part. Let's go to the what's it called? The uptrend. Let's go to the uptrend. The uptrend. So let's do DXY. Let's do DXY. I believe DXY was bullish recently. And let's do DXY. Was bullish recently. I saw that. Oh, beautiful. I love this. I love this uptrend. So now, guys, see these. From this point here to this point here, right? To this point here, to this point here, right? This point here, to this point here. This was the point now. To this point here, there's no significant low there. To this point here, market did this, give this, did this, then give this, then market did this, then this, then this, Beautiful. So now let's mark it out. See, might look rough, but once you pull out your two and mark them out, you will see what you've marked out beautifully. This is an high, a low, a low. Then we have a high. Then we have a high. Then the market gave this low. Then the market gave this low. Then the market gave this high. Then the market gave this low. Then the market gave this high. Then the market gave this low. Yeah. Then the market gave this high. What I'm just doing is I'm marking it using that two, that part, as simple as that. This high here. Then the market gave this low. The market gave this high. Yeah. So this is it. This is it. Beautiful. So can you see now how we mark it? This I. So let me explain something to you here. This I was the one that gave rise to this low. This low gave rise to this I gave rise to this low, low to this I 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 to this low, low to this I. Do you guys understand that? So now I've been able to mark out using market trend. I've been able to mark out using chart trend, live chart trend, to show you guys how you can mark out your market trend. So now, after this whole thing now that you've taught us, so please, how can I use this to take a trade? And please guys, I want you guys to listen to this very well. I want you guys to listen to this very well. When I tell you that when I teach a particular topic as if that is the only thing you need. That is the only thing you need to take a trade. Like that is the only thing you need to take a trade. But guys, no. So whatever I'm telling you guys here, you need other confluences. You need other confluences to this thing to actually make it work effectively. Give you that kind of profit you are looking for. Do you understand what I'm saying? So now, guys, this is another session entirely, okay? So I'm so sorry this video is long, but it's for your own good. Once you understand this, it becomes yours. We have this. Let's go back to our textbook explanation where we have this point here as a high, this point here as a low, high, low, then high, right? So now, then we have this point here where we have high, we have the high, we have the low. Sorry, let me just explain this first. Guys, I really want you to know this. Know this now. What you have here, on the inside this green box, this move you have here is called impulsive move. The move you have here outside this green box, I mean this move now. This move now is called impulsive move inside this green box, and the one outside is called correctional move. Impulsive, correctional, impulsive, correctional, impulsive, correctional. So notice the impulsive is usually longer and within a short term period than the correctional. Impulsive are always in the direction of a market trend. Impulsive are always in the direction of a market trend. So if the market is going up, its market is going up, like being bullish. Now, the impulsive move are moves that are bullish. They are bullish, while the correctional move are moves that are bearish. So correctional move are always against the trend. Listen again. Correctional move are always against the trend. You must understand this concept. Impulsive moving in the direction of the trend. Correctional against the trend. Impulsive moving in the direction of the trend. Correctional against the trend. Impulsive moving in the direction of the trend. Correctional sorry, correctional against the trend, impulsive moving in direction of the trend, right? So this is how it moves. Impulsive, correctional, impulsive, correctional, impulsive, correctional. So let me just, this is an uptrend. So let me just explain this now. So look at what we have here. This should be a low. This one we have here should be a low, right? This should be a low. So now, this movement to this point here, impulsive. This is impulsive. This, because this, the overall direction of this trend is where? The overall direction of this trend is what? Is going up. So this move that is going up is impulsive. This move that is coming down, correctional, right? Impulsive. Can you guys see it? Correctional. Give rise to what? Another what? Impulsive. To give a what? A correctional. Impulsive, yeah, to give a what? A correctional. Impulsive, correctional. Impulsive, then we have what? We have a correction, then we have impulsive here. Impulsive move, then that. So can you guys see the way I'm marking it? So now, after marking this, you don't want to enter on an impulsive move. You want to enter at the end of correctional move. So now, how do I know when to enter at the end of correctional move? So that is the reason why we have this in series. So you need to follow. If you are just joining this class, watching this video alone, and you didn't check the fundamentals, please go check the previous video. Okay, so that you can have a thorough understanding of where we are building this thing from. So I was telling you guys something. I was saying there is a link between fundamentals and market trend, like technical analysis. When I was talking about during the last video we had, this is what I mean, guys. Should I be honest with you? Most of the time, it's impulsive moves are caused by fundamentals. Impulsive moves are caused by fundamentals. When you see a move start going aggressively, caused by any news, trust me, that news most of the time is usually causing an impulsive move on that trend, following the direction of that market trend. I believe you guys understand this. Let me repeat myself again. Whenever you see a move in the Forex market, and the move is aggressive, caused by a news, trust me, go and check the overall direction of that pair. You will see that at the end of the whole move, of the whole aggressive move, it's usually in the direction of that market trend on higher time frame, because it's actually fundamentals that aligns trend. Oh, hey, some people are getting, some people are not getting. Okay, peace be with you. Okay, so now, so that's it. So now, I don't want to enter here. I don't want to enter here around this point here. Where I want to catch my move is around this point, so that I can ride this whole move to this point. Entering at this point is dangerous too. Where I want to enter is what? Here, at the end of a correctional move. At the end of the correctional move to catch the impulsive. At the end of the correctional move to catch the impulsive. At the end of the correctional move to catch the impulsive. So that is how you trade a trend. So let's go to downtrend so that I can mark this out too. Let's go to downtrend. That's card CHF. Card CHF, guys. Card CHF. So let's do this. Card CHF. Hey, can I just do FXCM? No, I don't want to do this. I don't want to do this. But I think I was using Pepper Stone. Right? I was using Pepper Stone. I think that's what I should be using. Yeah, beautiful. This is what I was using. Yeah, amazing. Yeah. So now, let's see. Now look at this. Look at this, guys. Look at this here. We have back to our textbook explanation. We have down, market push up, down, market push up, then down, market push up, then down. So where's our impulsive? So, okay, let's just say down. It wants to continue. Hey, okay, it's okay this way. Now let's see. We have this point here. This point here. Let me just see. So let's see. Okay, let me just box them out. Impulsive correction. Impulsive. 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 Impulsive, guys. So now look at this. We have this impulsive. Why is this impulsive? Because it's moving in direction of what? Of the trend. Simple. While correctional is moving countering the trend. Do you understand this? Moving in moving towards the trend is impulsive. Moving against the trend is what? Is correctional. As simple as that. So impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive, and correctional. Guys, I believe you understand this. So let's mark this out now on this trend. What we have here, let's replicate it on this trend. So what we have here is what? Impulsive. Then we have this as what? Correctional. Then we have this as what? Impulsive. Then we have this as what? Correctional. Then we have this as what? Impulsive. Then we have this as what? Correctional. Then we have this as what? Impulsive. Then we have this as what? Correctional. From this point here, impulsive to give a low here. Then what? Correctional to give rise to what? Impulsive again, right? So now that is how you do it. I don't want to catch this trade here. I want to catch it at the end of this correctional. I don't want to catch this trade at this impulsive move. I want to catch it at the end of this correctional, guys. So if you've been able to follow this video to this point here and you understand everything I've been talking about, congratulations. I appreciate you guys. So what I want you guys to do for me is my Instagram handle is below. Yeah, is below this video, and I want you guys, if you know you are following this series and you really want to practicalize this on your charts and you need someone to cross check this for you, I'm always available. What you just have to do is just follow me on Instagram, click subscribe button on this channel, follow me on Instagram, and what you've done, just screen grab it or screenshot it or record it and send it to me on Instagram. Racing will always reply. That's one thing. Racing will always reply, okay? So even if it is a whole night, I'm going to reply to all the messages. So as I'm teaching you guys, it will be an error for you not to practicalize it, especially when you are not exposed to this first. So as I'm teaching you guys this, I want you guys to replicate it at your own end. This is like a teaching. This is like a teaching, guys. So that's it. So let's go. So the last part in which we lead us, in which this is the first part of the market trend, and I believe this is detailed. So the last part I want to talk about for today, we'll be having a part 2 next week, Wednesday again. Okay, so join on this channel again. So now the last part I want to talk about is the transition between trend. I'll just explain, then that's where I will resume the next class coming, guys. So yeah, so let's go. Remember, so let's go back to the first law. The first law that says a market will continue to be on an uptrend. So far, it keeps breaking the highs and not its low. Always remember that, right? So if you remember that, which means once an uptrend starts breaking lows and not high again, it means something significant is happening in the chart. In which, could it be that this market is changing its trend? Still up. So let's go to the chart. Let's take it away. So I'm having this push up, push down, push up, push down, push up, push down. So let's mark it. Let's mark them. As far as this market is concerned at this point, obeying the first law of market trend. So we have this, 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 right? So what we have in here is what? We are, according to the law of uptrend, breaking high, breaking high, breaking high. So look at what we have here. Once the market comes to, market still obey this, right? Market gave a low here. Then all of a sudden, you start seeing markets do stuff like this, create a higher high and breaks a low. Look at this, especially look at this guys. So now, the first law says a market will continue to be in an uptrend so far it keep breaking highs and not lows. And now this market schematic starts breaking lows. Now this market has started breaking its low. Then the market did what? The market did this, pushed up, then break lows. What should that tell you? This market has deviated from an uptrend to a what? To a downtrend. As simple as that. Simple as that. So this market will continue to be on a downtrend. So far it keep breaking what? The second law now. So far it keep breaking lows and not highs. All of a sudden, when you see price start breaking highs, what should you note? Let's mark this first. Let's mark this. So highest point here, highest point here, highest point here, the highest point here. That is as the low, the high, low, the high, low, the high. So highest, as soon as this market start breaking highs, what should you know? So now the market is what? Is now changing dimension, changing trend. So guys, I'll be ending this episode. This is our second. Is it second? Yeah, our second episode here today, and I believe you guys enjoyed. You guys learned one or two things, and you know, it's more than just teaching. It's more than just learning. The hard work is when you practice, and that's where it sticks to your brain and it sticks to your mind. So please, as I've explained this, you guys should what? Should make sure you practicalize, and trust me, this is supposed to be on a premium. Though I have my own premium class in which I teach people now in depth. This is more deep than this. Trust me, guys, more deep than this. So I have my own class where I teach people, but I'm giving. This is like me giving charity out. Feel free to approach me, because I believe a lot of people don't really have that much fund. Honestly speaking, don't really have that much fund to pay for mentorship. I personally, to pay for mentorship. So most people rely on information on YouTube, and the truth of the matter is, some informations are not helping. But what I've determined to do is to help. What I've determined to do is to help. So feel free to hit me up on Instagram and share me your chat, things you've learned from this video, and by God's grace, God will give me the strength to reply and to help you know better, okay? Help you know better. So there are some limits to what I can tell you. There are some limits to what I can teach you. Just know that, because my students, they're the only one that have that access to that premium attention, where we go back on Zoom, then we explain things to ourselves and stuff like that. So that will mark the end of today's episode. Make sure you subscribe and turn on the notification button. By this time next week again, you guys should expect episode 3, which will be a continuation from this chat. Okay, I love you all guys. You guys should have a nice time. Bye.